Okay, so this week, obviously a shorter trading week, um, but the climb continued for pretty much every major indice. Um, let's just go ahead and start with the markets. I'm going to try and keep this episode relatively short. Um, so, starting with the Dow Jones Industrial Average, take a look at the chart here. These are weekly data. And we had this head and shoulders pattern back in here, and this week where we might have expected some type of pullback, we did not get it. The markets continued to march forward this week. um, you know 5 day, really 5 days, 5 up days, except for uh, when was that? Wednesday. No, that would be Wednesday. Tuesday, that's Monday. um, so yeah, we had this little pullback on Tuesday. Not really, I even kind of call that a pullback. Wednesday continued the march up, and then today we continue to march up in the Dow Jones. Now, I'm going to also, while I go through these, give you what David Hunter's forecast is. Now, we're 300, little less than a percent, and a little less than 300 points from the all-time high for the Dow Jones Industrial. And his projection is that we'll go potentially to 48,000 and maybe beyond that. So, that's another, what, 33% above where the all-time high is and where we sit today, roughly. The S&P 500 index. I mean, this is an amazing chart, right? We thought the end was near down here when we went below 4,200. Now it's completely turned around, and we stand at 45.59, and only 4606.65 it looks like is the all-time high. So again, we're very close to making it up there. Will we get a pullback up there before then? I don't know. We've left these caps just about everywhere on the way up, but doesn't seem to be too interested in those. And every time we've gotten a small pullback like we did on Tuesday, it's been followed up. It's been bought up right after that. And these are all signs of things, basically continuing to go up. The SPX, or the S&P 500, David Hunter has a projection of 6,000, and we stand at 45, so another 33% or so from where we stand today. So even getting beyond the all-time highs. Now we could keep in mind that here, we still have I don't know, technically to me, we just kind of tread water in here, but a pullback could be expected, any time. It looks a little worn out. Obviously, lower volume the last few days because of Thanksgiving, but I'm curious to see how we may get a pullback, next week. And again, they may be short-lived. Everything seems to be getting bought up relatively quickly. Looking at the NASDAQ 100, all of these look the same, although the NASDAQ has already surpassed what it was just a few months ago. And we're looking at these weekly data, again, not far from the all-time high, roughly 16,784. Is not that far away to reach. Will we reach there first, then get a pullback? Will we pull back before then? I mean, are we due? Yes. A higher low is anything above 14,000, but if we pull it back, say 50% or so, around 15,000, but it may not. It may just be a short little breather, and then make its way up to 16,784. And the let's see what I have for David Hunter on his prediction here is 20,000. So that's still another a little less than 30%, to make its way up to 30,000. And again, he's David Hunter. And the reason I'm mentioning him now as opposed to Peter Schiff, because most of his things are more in his favor. I'd say 70% in David Hunter's favor, maybe 30% in Peter Schiff's prediction, because things can turn. But right now, it looks pretty good from a David Hunter standpoint on his predictions. And the Qs, again, these are weekly data, climbing our way up, not far from the all-time high of I'm not sure if that, yeah, it is 403.44 for the Qs, and David Hunter is predicting on this one 500. And then the last one is the Russell 2000. He's anticipating the RUT, even though I trade the IWM, but RUT to get to 3,000 is the last number that I have for him. So this one's got quite a ways to climb. That would be, from 1,800 to 3,000. We're looking at obviously more than 50%, probably 60% climb from here to 3,000, and then to the all-time highs up here around. Let's see, yeah. Put that in, just get a rough idea of what it is on the RUT. Its all-time highs around 2450, and it stands at 1807. So it's definitely the laggard of the indices. People looking for breath and saying that the market's going to fall apart. David Hunter doesn't seem to be too worried about that. The 10-year, we had a little jump back this week, a little bounce, and we started to break down here. I thought we might go ahead and break down below here, but we got a gap up here, probably 4.77%. Probably, could make its way back up to there before it starts its decline. From there would be the expectation anyway. No guarantees, but that's kind of my expectation, is that this thing will begin to leak below 4.351%. And I'm not even going to mention the numbers that David Hunter's talking about at this point. But he does expect this to continue to decline. Obviously you're going to have, in this case, a pull up maybe, and before we have more of a decline. The dollar continued down. These are daily data. Here's the weekly. We're kind of in this downtrend. We broke the uptrend back the week of October 9th, and starting to make our way down. Again, we could see some pull ups back in here before it makes its way down further. It could just collapse all the way. It definitely is moving in chunks now, as you can kind of see here at these weekly data and the daily. A little bit more up and down, but still overall down for the week. Crude oil also. We actually did kind of break this downtrend. Is that significant? False breakout is my guess, but again, we could run back up to maybe 80 or so before it continued to decline. It just broke this downtrend line here. So expect things to kind of they aren't going to keep going down in a straight line. I mean, you can just look historically and see nothing's in a straight line. But you can consider the structure that's in there. It's broken the structure a little bit. Is it just back testing this? It's going to come back up before it, continues a new decline. The VIX finally actually broke this number. We haven't been able to break it. That's 12.71, down to 1245 for the day is the lowest it's been. Back here in, let's see, what is that? January 16th of 20, roughly. of 2020. So that's a long time ago. Over 3 years since the VIX has been this low, and we look at the breadth. Something everyone's keeping an eye on. Markets can't go up unless we start getting other companies go here. Although I would continue to watch it up because the indices are largely made up of the FANG stocks. The Facebook, now Meta, what are they? Maybe Mangs. I don't know. But anyway, that's a look. We're making a little bit of progress. But we'd like to see this thing, obviously, the breadth get up. It'd be nice for all the companies to participate up into 91%. I just don't see it getting up that high. Not my expectation anyway. Let's see. What else do we have? The economic calendar. Let's look at this week. And we had existing home sales came in a little bit under what the expectation was, month over month, down 4.1%, which kind of helped with the FOMC minutes. Powell basically is not talking, or the board is not talking so much about a rate hike this year anymore. That obviously helped the markets a bit. And then on Wednesday, we had 30-year mortgage drop 0.2%, which is also helpful. Durable goods orders down 5.4%, which was more than the expected 3.1%. Jobless claims were lighter than expected after we had a bigger than expected one last week. So that was kind of a negative. And then the Michigan consumer sentiment came in a little bit higher than what the expectation was, but certainly lower than the previous period. And then Friday we had all these PMI portion of manufacturing came in lighter, and services came in a little bit stronger. But the overall, obviously, composite, the combination of manufacturing and services stayed the same. Take a look at next week. Most of it's going to happen on Thursday. What do we got here? So starting Monday, we have new home sales expected to come in lighter than the previous period. The Consumer Board consumer confidence expected 101. That's sometimes a market mover. We have all these speeches from FOMC members. Expectation, we'll see what happens with the 10-year yield. A good indicator of what was going to happen by Wednesday with the mortgage rates. Hopefully these continue to go down. GDP growth rate comes out also on Wednesday. And Thursday is kind of the big day. So we have the PCE index expectation of 0.2%. Personal income comes out along with that. Supposed to be increased by 0.2% month over month is the expectation. And the PCE, let's see, we mentioned that Chicago PMI has still been running below the 50, which is contraction. Pending home sales expected to go down by 1.5%, and month over month, and then year over year, it looks like 9% is the forecast. And then Friday we have some S&P Global Manufacturing PMI. So for the whole world, basically, not just the U.S., and the ISM Manufacturing PMI expectation 47.6, so a little bit better. Hopefully, getting an improvement there. Manufacturing employment still under 50, and then Powell gives a speech on Friday, which can move the markets, but it is Friday, so maybe that'll be something for the next week. The kind of the final thing I guess I want to run through here is the sentiment survey of investors here. Obviously getting more bullish as the market continues to climb its way up. And then we look at the fear and greed index, and remember, we're down here not long ago. Take a look at the timeline as far as the fear and greed index. We're in extreme fear, but we've climbed that mountain now, and so we're getting greedy again, which is time for maybe a pullback as people get more greedy. We could get a significant, you know, I know there's a lot of momentum right now behind the markets, but you'd still get a significant pullback because on the structure, we don't really haven't really put in that higher low. It's just been higher high and kept going higher high. So it would be healthy, I think, for the market to pull back just a little bit. Whether that happens once we hit all-time high, since we're so close on many of the indices, or happens, at the beginning of next week, just have to wait and see how things play out. Anyway, that's really my final comment. I think it's been interesting to watch how the markets continue to climb without a hint of a pullback. This is all kind of what David Hunter thought would happen. I think he would have thought it would have happened a year ago, is the only bad thing. But it's happening now, and the expectation is that some of these will have hit all-time highs by the end of the year. And heck, we could hit all-time highs by next week without a pullback. And then, he's giving... doesn't really give you great timelines. I've learned not to trust those, but in general, he's saying that in the first half of the year, we should start to hit some of these numbers that I talked about at the beginning of this episode. So anyway, that is what I wanted to cover this week. I'll start to talk a little bit more about some things that might be ideas for you to do in subsequent episodes. I want to get clear of this Thanksgiving week. There's a lot of different things that I'm doing in the expectations of some of these other markets that are out there, like commodities and so forth. But anyway, that's what I wanted to cover this week. And remember, there's always a better way.